everyone. Thanks for joining today. I have a very special guest, Thomas Chan. He is also a fellow finance YouTuber who specializes in insurance and retirement planning. And I have a very juicy topic for you guys, especially the business owners in Canada who wants to really grow their wealth tax-free within your company through insurance planning. So before we get into the details, Thomas, did you want to introduce a little bit about yourself?
Absolutely. Well, hi everyone. My name is Thomas C. Chan. Now, I do have a lot of hats. I do have, let's say, insurance, retirement, investment. But I always say that I'm more like a problem solver. Today, if my clients have questions regarding to anything related to finances, I want to be the best to help them as well too.
Before we jump right into our topic, I just want to give you a bit of background on the tax-free ways that you could grow your wealth in Canada today. So the first two is pretty common. First is the principal residence exemption. So if you live in your home and you end up selling it, all that capital gains is tax-free. The second one is the tax-free savings account, the TFSA, that I'm sure a lot of you guys know. And it's a way for you to invest your money and grow it tax-free as well. The third topic that we're going to get into a little bit more detail today is insurance planning. So Thomas, what are the three ways that corporations can use insurance planning to their advantage?
For sure. Yes. So absolutely. So number one, when I plan insurance for my clients, I always want to make sure that I can achieve three main advantage. The first bottom layer, of course, is just to have the income protection. In case the business owners, something happens to them, or in case something happens to the business, I just want to make sure there's enough money to protect the business and to protect their family as well too. That's the kind of the first layer. The second layer we want to create it is to create that tax shelter assets. A lot of people thought that, oh, insurance is just something that if something happens to me, then I get paid. I don't get that money back. And it is not true. Again, if planned properly, you can actually create saving inside that appreciate over time. So no difference than a stock portfolio, or no difference compared to real estate portfolio. It actually accumulates over the time. And lastly, of course, the tip of the iceberg is actually want to create a tax-free retirement income, because just on personal side, we have the government benefits such as the OAS, CPP are taxable, RSP are taxable, pension are taxable. So again, a lot of things that is taxable, and there could be a potential that you could pay more taxes than you are right now and losing some of the government benefits as well. So having that tax-free saving, principal residence, and maybe life insurance, we're able to achieve more tax-free retirement income for the rest of the years.
Right. So just to kind of bring it all together, the three advantages of insurance planning is
the income protection, the asset tax shelter, and a tax-free retirement income.
Right. So there are three main benefits to insurance planning. So I think what really got me interested when we first had this discussion was how it works. So we talked about, the benefits of it. What are the types of insurances out there? Because I know there are a lot of different types of insurances out there, but I want to know the specific ones related to corporations.
Lovely. So I think there are mainly two types of life insurance that corporation can be benefit from. One is very straightforward, a term life insurance. So for example, a coverage of $1 million for a duration of 25 years, meaning that in the next 25 years, if something happens to the key person or the business owner, then the business get that money to find another CEO, to find another business partner, or actually do something called buy-sell agreements where they can actually offer to sell their shares as well too. So because business usually will be down in the next, hopefully, let's say you have a restaurant business, most likely you're going to sell this business in the next 20 to 25 years. So a term insurance will be using the lowest cost to get the highest coverage just for the protection side.
Right. And how I understood it, that made it a little bit easier for me to understand, is that it's kind of like car insurance. So if you end up using it, that's great. But if you don't need it, then it's sort of like money out the door. But what we want to know is the next type of insurance, which will help with the long-term wealth creation.
Right. So it's actually the opposite side of term life insurance, which is called a permanent life insurance. So as the name suggested, instead of covering a certain period of time, it's now lifetime. So it's guaranteed that this life insurance will pay out. So that's one. But on top of that, what business owner loves about it is because on those majority of those permanent life insurance, it actually contains a saving portion in there, or so-called, the terminology is called cash value, but I just like to call it saving. So depending on what kind of permanent life insurance that you've been doing. So it could be something called the universal life, which focus more on investments, or someone will focus on the whole life, which focus on the dividends, more guaranteed return, that totally depending on the clients. But through that, again, now you create a tax buckets where you actually grow your asset tax shelter inside, and later on during retirement years, or even just within 1 or 5 years for midterm, you can also access that money as in to reinvest in the company, to reinvest in other opportunity as well too.
Right. And from what I understand, it's also called IFA, Immediate Financial Arrangement.
Yes.
Is that correct?
So a lot of people, IFA is like a strategy that utilizing those whole life insurance, using those universal life insurance to access the money in the next 2-3 years for short term. So how it works that, again, this is all we talk about. Let's just say I do have a client, let's say a chiropractor is very successful, making $500,000 a year. So he probably need around $150,000 to $200,000 for personal use. So therefore, each year, he has $300,000 in the company that's growing as well too. So in a normal situation, if he invested in mutual funds, stocks, real estate, then of course trigger that 50.67% taxes. So therefore, he wants to utilize this insurance as a tax shelter. However, now a lot of people do come in and say, hey, Thomas, if I've invested $50,000 a year, $100,000 a year, I could use this same money to invest in other things that can get me a bigger return. So therefore, again, depending on the situation, the IFA comes in where now you put that $50,000 in there, $60,000 in year, and year 2, you can actually borrow the same amount of money back. So now you are not losing on the opportunity cost, while you're actually building compounding growth on that UL, on that whole life that you have already. So it's like kind of like double dipping. Yeah. And the best part is that because now when you kind of borrow against from it, it's not a tax issue because it's a loan. So there'll be no taxes involved. Sure, there will be interest, but depending on where you invest those money, interest can be also an expense if it's further invested in the business or further invested in somewhere that can produce an income as well too.
Right. So from my understanding is that, you have excess money in the corporation. And with my other video that I filmed with Thomas, which is on his channel, we talked about that the corporation and the individual is taxed separately. So in order to take advantage of the tax deferral within the corporation, you somehow have to invest that money somewhere so that it could make money without pulling it out. And insurance planning is one of those things. Then you can make set payments where after a set period of time, you're able to pull that money out tax-free, which we'll be getting into a bit more detail. Also, another advantage is by having this insurance, you could actually borrow against it and pull money out tax-free because it's a loan. And if it's used towards business purposes, the interest on that loan can also be deductible, tax deductible. Is that roughly right?
Yes, and I think that the perfect example is I will probably simplify a lot, so make sure you do talk to accountants, tax lawyers, and the insurance planner. So for example, let's just say if I have $500,000 in my savings account doing stocks, let's just say Royal Bank's shares, for example, right? So based on today, for $500,000 yearly can produce a roughly around $20,000 to $25,000 in dividends. But of course, now this dividend, of course, needs to pay tax. So the business actually only get back maybe $10,000, $12,000 because of the deduction as well too. And also that $20,000 now actually have to go back to the personal side. But at least, you don't actually get the full $20,000 to $24,000 in dividends. So fast forward, if you pass away, of course, when you pass away, then it will trigger the capital gain on the Royal Bank shares. So of course, there will be the capital gain tax, the probate, etc., etc. But versus for life insurance now, let's just say if you need to borrow $30,000, it's going to be directly 100% $30,000 going back to your corporation. Or actually through detailed planning, it can actually go directly to the shareholder as well too. So it actually skips multiple things. Of course, again, I have to put the disclosure here, make sure you do talk to your accountants and tax lawyers to make sure that how the plan works. But I think that's why at the end of the day is about taxes, especially for business owner. They're making so much good incomes. CRA always want to reach their monies into the cookie jar. So that's why we want to create more barriers or shelters. So therefore, it actually doesn't trigger a lot of tax bills to them.
So from what I'm understanding, there are a couple of tax benefits here. First of all, within the insurance, when it's invested, the income grows tax-free within the insurance plan, right? The second way to save taxes is later down the road, say that you need to borrow against that insurance. Let's say, you put towards $1 million over 20 years, you need to pull out the $1 million now to pay for your retirement. In that case, that loan is not a taxable event because you're borrowing with a bank, and that bank is taking your life insurance as collateral because it's a guaranteed thing. And when you later down the road pass away, then the bank cashes out on the life insurance. And in that case, it's tax-free because the insurance has been cashed out after your death.
Right. So just to quickly echo on that. So, of course, we talk about the first part, which is how you access the money alive. So, Thomas, what happens to all the money that you borrow? When are you going to pay it back, right? And that's the second part, why life insurance is such a powerful tool. Because under the Life Insurance Act, when the life insurance pays out, is actually going to be tax-free to the beneficiary. So in this scenario, it's going to be the money, pay off all the loans and going into towards the corporation. Now in the corporation, there's something very interesting called the CDA account, capital dividend account, where actually the shareholder can access this money tax-free as well too. So again, having, let's say, $1 million of death benefit, minus the loan, minus the net cost of insurance, minus the ACB, and then, of course, now it actually goes to the CDA account, which the shareholder can take it out alive and tax-free as well, too. So it makes it really powerful because let's just say if you're the RSP or tax-free saving, you cannot go to a bank and say, hey, I have this tax-free saving, would you like to lend me money? Unfortunately, I don't think so. But again, for life insurance, majority of the banks will agree to because they know that they will get their money back.
Okay. Well, we're just going to wrap it up here. Thanks, Thomas, so much for this conversation. If I were to just summarize, we talked about how you can use insurance planning for your business to grow your wealth tax-free. We also talked about the types of insurances out there. We talked about how you can plan for retirement with your insurance. So contributing to your insurance over time and then cashing out. We also talked about the tax benefits, where you could pull money out later, tax-free essentially. And I know it was a little bit complex at times. So if you are interested in taking advantage of this sort of insurance planning, make sure to reach out to Thomas. All his details will be in the description box so that you can reach out and you can ask him questions on how to actually structure this. Other than that, was there anything else you wanted to add today?
For sure. So actually, a side note, I think it's actually a fun fact. I remember I saw a report last year. So back in 2022, one of the big four insurance company actually had a report on what is the percentage of the kind of insurance that they actually able to sold. A surprising fact that just in BC, there were at least 1,400 cases that the client is willing to put $10,000 to $25,000 a year into the insurance. There are around 700 cases that the client is willing to put $100,000 to $250,000 per year into life insurance cases. And I think there are at least 40 to 50 life insurance cases where the client is willing to put $1 million and above. So I always question myself before I got into this. So I was like, how come the client is willing to put this amount of money into this insurance policy? Don't they have accountants? Don't they have tax lawyers? Don't they have CFO to do this? Why they all agree on these kind of plans? So there must be something that they know and not a lot of Canadians know. So, that's what my video is about. That's why I'm happy to connect with you, because I always say insurance is like accountants, if I may say. It's all about the numbers, but it's all about logics, but it does provide that protections and also to accumulate wealth. So understanding how the taxes works, understanding how insurance works will surely able to help you to save faster for your financial future.
There's a reason that there are experts. So, I might be a tax expert, but insurance is Thomas's field. And so if you have any questions, feel free to go on to his channel. He has a lot of content about insurance planning and retirement planning, as well as investing. Thanks so much for joining us today, and I'll see you guys in my next video. Bye.